Hi guys. Today we will analyze Pulte Group stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock's overall performance in the market is below average. Both the short-term and long-term trends are neutral. There should be more interesting stocks out there. Strong support level is around $40. Next strong support level is around $35. Strong resistance levels are around $46 and $50. Next strong resistance level is around $58. In the last month the stock has been trading between $41 and $47 range. It is currently trading in the middle of this range. It may be a good idea to wait for a pullback before considering an entry. The stock has an average volume of 2.2 million. This is a good sign as it is always nice to have a liquid stock. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model, discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 13% per year, for last 5 years. We see that the average profit margin of the stock has been around 10% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 111% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Pulte Group: bad, average, and good. First scenario. Pulte Group will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 0%. Future profit margin would be low, 10%. Future free cash flow to net income rate would be low, 60%. In this case, the fair value of the stock today would be $40. Second scenario. Pulte Group will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 2%. Future profit margin would be average, 11%. Future free cash flow to net income rate would be average, 70%. In this case, the fair value of the stock today would be $53. Third scenario. Pulte Group will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 4%. Future profit margin would be high, 12%. Future free cash flow to net income rate would be high, 80%. In this case, the fair value of the stock today would be $69. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 9.04. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Pulte Group, analysts forecast growth rate around 6% per year in next 5 years, and future P/E around 4. Again, I will use 3 different scenarios for Pulte Group: bad, average, and good. First scenario. Pulte Group will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 0%. Future P/E would be low, 4. In this case, the fair value of the stock today would be $15. Second scenario. Pulte Group will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 2%. Future P/E would be average, 6. In this case, the fair value of the stock today would be $27. Third scenario. Pulte Group will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 4%. Future PE would be high, 8. In this case, the fair value of the stock today would be $44. As you can see, today the stock is fairly valued, $43, if we expect the company's high performance in future. While the company has a great profitability rating, there are some minor concerns on its financial health. Also, the stock is expected to show a small growth in revenue in the next 5 years, 6% yearly. However, the stock looks fairly priced at the moment. I like the stock at current levels. But keep in mind that the housing market is tricky, and it has elevated risks. Demand for new homes has materially fallen recently, due to higher rates. Do your due diligence before buying the stock. Company's strengths. Pulte Group is an American residential home construction company, based in Atlanta. The company is the third largest home construction company in the U.S., based on the number of homes closed. It operates in 44 markets in 23 states. The pandemic has caused accelerated demand for single-family housing. The company's cyclically high profit margins should only decline moderately over the next few years. Pulte continues to buy back stock, and reduce its share count by 5% a year going forward. The company's return on assets of 16%, return on equity of 29% and profit margin of 15% are amongst the best returns of the industry. The company's balance sheets are strong, and its debt level is low. Risks. Housing market is tricky and it has elevated risks. Higher interest rates will put a dent in home sales and home prices. Mortgage rates above 5.5% are likely to reduce home buyer demand and affordability to purchase single-family homes. Home building industry is cyclical in nature, and tied to the health of the economy at large. Pulte is seeing supply chain challenges, and inflation driving higher wages and material costs. Demand for new homes has materially fallen recently, as higher rates, negative consumer sentiment, and inflation hurt new unit orders ahead. A recession scenario in 2023 would change the company's land acquisition and development plans, and likely reduce targets for opening new communities. Tough competition. The home building industry is fragmented with 17 public home builders and many more private home builders, competing for land, materials, labor and customers. Pulte Group is adjusting its business to lower demand, focusing on backlog and cash generation. The stock is trading at very attractive levels, but risks remain elevated. Based on estimates for the next 5 years, the company will show a small growth in revenue. The revenue will grow by 6% on average per year. The earnings per share is expected to grow by 8 to 10% on average over the next 5 years. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.